What goes down the hardest often comes back up the strongest. And same is the case with FMCG stocks currently. For 4 brutal years, these FMCG stocks were wealth destroyers. While Nifty doubled, these once reliable giants left the investors crying. Just look at the chart. They have shown a very sharp downfall. Hindustan Unilever 20% down, Britannia 30% down, and ITC, don't even ask. But times have changed now. The FMCG sector is ready for its strongest comeback due to 3 triggers which I mentioned in the first part of this video. And while doing research for the first part, I discovered something that kept me awake all night. An amazing undervalued opportunity. Now this amazing FMCG stock has been quietly building an empire. It gives 6-time returns in just 5 years with constant growth in its sales and profits every year with amazing profit margins. And after the recent corrections, it is trading at a 30% discount. And this stock has huge potential and most of the retail investors don't even know about it. And I am going to reveal this hidden gold mine in this video. And most importantly, we will understand that why this discount might be the opportunity of the decade. And while doing research, I discovered the secret expansion plans of this company that will shock you the most. Now here's what most of the investors do not understand about the beverage business in India. Everyone thinks that they know the players, Coca-Cola, PepsiCo, maybe some local brands. But these global giants do not actually manufacture their products in most of the countries. What they do is they license the recipes to the local players who do all of the heavy lifting. In India, there is one company that has been building a beverage empire for decades now. They make every Pepsi, every Mountain Dew, every 7-Up that you have ever bought in this country. Yet 99% of the retail investors have never heard their name. The public retail holding in this company is just 7.80%, while the FIIs and the DIIs are holding 32% stake. And this shows the confidence of the big players in this company. Also, the company just reported their numbers, which made my jaw drop. 81.7% of profit growth in a single quarter, 13,824 million rupees of net profit and 71,630 million rupees in revenue. And they have grown their revenue and net profit every year constantly without showing a dip on a year-on-year basis. But there is a twist in the story. Now their numbers have shown explosive growth, but the stock price is trading near their 52-week lows. So the market is completely ignoring this wealth creating machine. But by the end of the video, you will understand why this might be the most undervalued FMCG opportunity hiding in plain sight and how exactly you can take advantage of this situation. So watch the video till the end. So the company that I am talking about is Varun Beverages Limited, VBL. And to understand that why this is such a massive opportunity, we need to know 3 game-changing insights that most of the investors are missing. Now imagine that you are the CEO of PepsiCo and you want to dominate the Indian markets, but you do not want the headache of setting up factories, managing distribution, and handling local regulations. So what do? You find a local partner who can do it all for you. Someone who understands the market, has the necessary infrastructure, and can scale rapidly. So that partner is VBL. But here's what is insane. VBL is not just PepsiCo's franchisee in India. They are the largest PepsiCo franchisee outside of the United States, larger than their operations in China, Brazil, or Europe. But here's where it gets really interesting. Now in Q2 of 2025, while the entire FMCG sector was struggling due to monsoon impacts and volume decline, VBL did something extraordinary. Now their net profit did not just grow, it exploded by 81.7% from 7,313 million rupees to 13,284 million rupees. So by doing this, They are sitting on their highest ever quarterly profits in their history. So that's not growth, that is a profit tsunami. But how? How do you nearly double your profits when the volumes are declining? So the answer lies in two simple words which most of the investors ignore: operational leverage and international expansion. While India was facing unseasonal rains and volumes declined by 7.1%, Varun Beverages South African operations were on fire. South Africa grew by 16.1% and Morocco started producing Cheetos. Yes, they are now in the snack business as well. So Varun Beverages Morocco subsidiary, Varun Beverages Morocco SA, signed an exclusive snack appointment agreement with PepsiCo to start manufacturing and packaging Cheetos in Morocco. So this is where VBL's story gets really exciting. While most of the Indian companies are struggling to expand globally, VBL is quietly building an empire across Africa. So they are not just into the beverage business anymore. They are diversifying into snacks, expanding capacity, and positioning themselves as PepsiCo's go-to partner for emerging markets. Think about this for a second. Africa has 1.4 billion people, and most of the country's GDP growth is around 5 to 7%. So, young population, rising income, increasing consumption. And VBL is getting first mover advantage in a market which is about to explode in the next decade. And the market is treating it like it's broken, trading near 52-week lows despite of having such explosive fundamentals. But the million rupee question is, if the numbers are so good, then why is the stock falling down? And more importantly, is this a perfect buying opportunity or is this a value trap and the stock will keep on consolidating? So the answer is beautifully simple, and it is exactly why this might be your biggest opportunity right now. See, here's what most of the retail investors do not understand. Even the best of the companies cannot keep up moving up in a straight line. Physics applies to stock prices as well. What goes up fast must come down to breathe. So let me paint you the complete picture of VBL's journey. So rewind to January 3rd of 2022, VBL was trading at 117 rupees per share. So a decent FMCG stock, nothing too exciting, and most of the investors probably ignored it. But then something magical happened. The stock started climbing and climbing and climbing some more. And in just 2.5 years, VBL touched highs of 680 rupees per share. Now do the math with me. 117 rupees to 680 rupees. So that is 481% returns in just 2.5 years. Now during this rally, it wasn't just the stock price that exploded. The PE ratio went completely bonkers, from a reasonable 50 PE to an eye-watering 100 PE. And that is exactly what is happening right now. VBL is not falling because it is a bad stock. It is not correcting because the fundamentals are broken. This is what we call as a time and price correction. Because in this, even the best of the stocks, after giving a one-sided rally, need to pause, breathe, and let the fundamentals catch up to their valuations. Now, here's why this correction is actually healthy. It is giving smart long-term investors like us an opportunity to build position in a quality company at reasonable prices. Now, let us look at the technicals because the charts are telling us a very interesting story. Now, if you take a look at VBL's price action, there is a clear support zone between 430 to 450 rupees. And this is just not any random support. Now, this zone has been tested multiple times in the past, and the stock has bounced back strongly from these levels. And for long-term investors, this 430 to 450 zone represents a good accumulation opportunity. And the valuation is also looking decent again at 58 PE. You need to understand the risk that you're taking. This stock can remain in consolidation for a while, maybe a month or even a year or even more than that. So this is not a quick money kind of an opportunity. Now see, if the 430 to 450 rupees support zone is broken, we could see the stock fall near 350 rupees levels, and that is another 20% downside from the current levels. So VBL is only suitable for long-term investors, people who can hold the stock for 3 to 5 years, people who understand that great companies sometimes take time to reward patience. Now, I have prepared a detailed research report on VBL covering every aspect: the technicals, the fundamentals, the risks, the opportunities. You can find the link of this report in the description below. It is a deep dive analysis which will help you in making an informed decision. And if you discovered something new in this analysis, then smash that like button and subscribe for more such hidden opportunities and ring the notification bell so that you never miss out on our research. Now, this was Sanika from RANGAONE Finance, and I will see you very soon in the next one. Till then, bye-bye. Over the next 3 years, a massive 27.7 lakh crore rupees opportunity is opening up. This development is a generational wealth creation opportunity. So the question is, are you going to be a part of India's revolution, or are you going to watch it from the sidelines and regret about it 5 years later? Because the stock that I am going to talk about in this video might be your last chance of getting in before this sector shows a boom.